is Jim Bauer, the president of Bauer Trading, Lafayette, Indiana. Contact www.bauertrading.com. Looking at this past week, quite an interesting market from a trader standpoint as well as a producer standpoint. We continue to see the CRB try to push up into levels of resistance. It's led by mostly, actually, the crude oil market, which, because of its up move and its ability to move upward even on downward type news, seems to tell us that the global economies are starting to fare a little bit better and it's providing a backdrop of stability and a little bit of growth. Even though we've still got some significant problems throughout Europe and the United States, it does look to me like the demand basis, and we're starting to see some recovery globally. Stock markets are starting to stabilize and move up, and if we could just get this unemployment thing starting to heal, I think things could get better. As far as grains are concerned, obviously a kind of a down week. I believe corn was down approximately 13 cents for the week, beans down 17.5, wheat down 26. We continue to hear reports from Argentina that the beans are still not filtering into the pipeline quite as fast as they would like it to because of the wet weather up in the Mato Grosso and Goiás. But those beans should start to come here, I would think, here by the last 2 weeks of March, first couple of weeks of April, and that could put some competitive price bid into that international market where China has been so active. Looking at wheat, obviously we're approaching spring, or at least we're here pretty quick. I think a lot of people are getting awful tired of it. I'm out in New York right now, and even the New Yorkers who are used to about just anything, even they say this winter's got to stop soon, and I'm sure all of the nation would glad to see that. We are seeing, though, some people go back up to the fields now to start trying to get some of this corn out that's been out since last fall. That's kind of a slow go. We're seeing some very, very interesting basis-type situations in corn where number 2 high is in need and want by some end users that really cannot afford to handle or feed anything that's got vomitoxin or a fungal percentage that's too high. And consequently, some of the blend now is coming over into that number 2 yellow corn. And there's quite a bid in some places. In fact, I had a customer in Kentucky get as high as 65 over for some nearby shipment of corn, but it was number 2 high-quality yellow corn. And then in parts of Illinois, Indiana, we're running in that plus 20, plus 25 area. So tip kind of moving northward. Hopefully that basis thing will start to pick up and be favorable to our producer. Looking at wheat, wheat is just now starting to come out of emergence now from winter in the northern hemisphere. We're seeing reports that things are a little bit uneasy, some dryness in certain spots to the west, the Pacific Northwest, and of course in parts of Inner Mongolia and southwest China it's starting to turn dry. We'll need to watch that as we go into the latter part or the nearer part of the week coming out of emergence. On this wheat situation, we certainly are watching that situation very closely. We have client and customer base up in that region. Of course, many of them would like to be getting ready and hopefully get out in the fields here pretty quick in order to get that spring wheat in the ground. It's been so favorable up there. And, of course, she may turn the other way and make it a better situation. But if she doesn't and she continues to delay them, then I think there's a pretty big question actually going to get planted. And we continue to hear from the seed salesmen of lack of sales. So spring wheat is a very inelastic commodity. The demand has to be met through price. You get a lot less acres, and then if something goes wrong this spring or summer with the production cycle, then that could be quite the interesting market because of its inelasticity to the other markets. So there are some spread relations that you can look at. Of course, you always want to define your risk. And again, I think 2010 is one of those markets where you're going to have to shorten your window of trade. You're going to have to be very selective in the commodities that you want to buy or sell, because the backdrop is much different than 08, 09. What I mean by that is you don't have the weakening for commodity prices in general, so you really have to be very astute with the supply-demand table for each commodity separately as individual commodities, and really be aware of the global S&D as well as domestic S&D. Be flexible, be selective, be creative, but certainly use a higher risk management than what we've seen in the past by some clients, because we just have that constant positive effect of the weaker dollar. The dollar's been moving up essentially since the first of the year. So again, On these crop reports out ahead, I don't really think the March crop report is going to have too much impact on the cycle from last. I do think the market is going to be heavily focused on the March 31st report because that's going to be the first indication of real acreage estimates. It's going to be a situation where we're going to get a real solid global package as far as where they're at. We're going to get enough in South America, and we're going to look at these ending stocks both from a global and domestic standpoint. So the March 31st report will be really important